You look at what Li Keqiang says, and it's quite an admission. And, you know, quite often they underplay these things. And if that's still being underplayed, it must be a Chinese economy in a rather parlous state.
Good morning, Rich. Great to be with all of you. Yeah, look, it was very interesting and very unusual for a figure as senior as Premier Li to address as many as 100,000 officials all the way down to the very local level, saying we need to get unemployment down immediately, very fast. So that, I think, is somewhat encouraging to hear, but the market remains a little bit cautious. We've seen a couple of false dawns where we've heard what sounded like very encouraging words, but so far we haven't really seen the follow-up action, the concrete actions coming through across the policy space, a little bit here, a little bit there, but nothing really in the shock and awe category to give markets confidence to move forward from here. So I think, of course, really interesting, but the market's still very much in a wait and see and a kind of you have to prove it to me mindset, where we need to see more concrete, tangible action to help find a bottom in confidence and then perhaps in markets.
And BlackRock, just a few weeks ago, you guys made a call of really dropping your bullish call on China after what we've seen in the stock market. Is there anything you've seen, if they actually abandon this growth target per se, would that change your mind on that view?
So I think already the market is very much of the view that the growth target looks hard. So I think if we think about where the market's actual expectation is versus the official target, I think a lot of the work in terms of an expected lower growth is already done. The uncertainty remains around policy. And China, obviously, with the recent ongoing Shanghai lockdown, it seems to us that we are in a period of maximum uncertainty vis-a-vis China with, of course, the ongoing lockdowns. It's hard to know where the next one will be, how bad it will be. And very naturally, that gives investors, let's say, pause for thought. And this China situation isn't just relevant for China, but of course it has important spillover impact for the global economy, potentially exacerbating already, how can I say, troublesome supply side situation, worsening that with implications for inflation, and obviously isn't good for the global growth picture. So clearly it's a challenging time for China, but with China being such an important part of the global economy, of course, the global implications are also worth noting, we think.
And equity market losses have arguably, and I'd like to ask you whether we've priced most of this in and whether the bulk of the losses is behind us. It's almost a question whether, you know, the Fed, is it easier for the Fed to pivot dovish, or is it easier for China to abandon or tweak its COVID zero policy? I guess the point here is, do I start positioning now in this cheap equity market?
So I think, David, you pick up the critical point, which is there's a trade-off, right? So this kind of single focus on inflation in the West, we think is kind of misguided, because there are always trade-offs in life, whether that's in China between 0 and 5.5%, or in the West between inflation and unemployment and so forth. So recognizing that trade-off, we think, is absolutely fundamental. And I think it's been quite interesting to hear just this week the Atlanta Fed governor start to recognize that, it seems to us, and say, hey, maybe we can go to neutral and then see where we are, given monetary policy works with lagged and variable kind of time factors, I guess. So we think that acknowledging the trade-offs, of course, very different kettle of fish in China versus the US and elsewhere, but just recognizing that there are trade-offs and having a single policy goal, we think is very challenging. So I think in both China and the US, for very different reasons, what we would like to see is a broader recognition that there is a trade-off rather than a single focus on one variable, because sadly life is more complicated than that.
Ben, talking of trade-offs, you know, one wonders whether what's happened perhaps reinstates the veracity of the Phillips curve, but I'm not going to go there. But let's just take a look at what's going on market-wise, because what we do see is a trade-off taking place. There does seem as though inflation concerns are being slowly replaced by growth ones.
Yeah, and that's important. So I love a bit of a Phillips curve as well. And it's quite normal to understand that there are trade-offs, right? So normally if you tighten, because you're worried about inflation. That's fine, of course, but normally it leads to some negative consequences as well, be that in housing, be that in unemployment, be that in consumer confidence. So sadly, we can't have our inflation and our growth cake. We need to at least blend the cake cocktail, I guess, to some degree. And I think it's encouraging, as you're saying, Rish, I think, that we're starting to see that kind of all over the world, a recognition that inflation, of course, at 40-year highs, cost of living crisis, of course, it's front and center. There's no confusion as to why that would be the case. But just focusing on inflation, moving to a very restrictive policy, and therefore potentially throwing hundreds of thousands or millions of people globally into unemployment shouldn't be forgotten. And I don't think policymakers are forgetting that, and I think they're making that clearer little by little in recent times, and we'd expect more of that in the weeks ahead.